If you haven't filed your taxes in 5, 10, 20, or even 30 years, you're not invisible. The IRS hasn't forgotten about you, they just haven't gotten to you yet. And with the enforcement changes in 2026, the silence won't last. Most people think if the IRS hasn't contacted me, I'm safe. That's not how it works. Today I'm breaking down what actually happens when you haven't filed for years and why 2026 is the worst year to continue doing nothing. Let's talk about why people stop filing and why it snowballs so quickly. The biggest triggers that I've seen are illness, divorce, a major life crisis, or just simply overwhelmed with their business books, or sometimes a sudden drop of income. 1 year becomes 2, and then 2 becomes 10. The fear of owing creates paralysis, and people just simply stop doing anything. Shame keeps people from reaching out earlier. You know, most non-filers aren't criminals. They're good people who just got overwhelmed. Let's talk about what the IRS actually knows about you, even if you don't file. The IRS receives your W-2s, 1099s, 1098 mortgage forms, and other forms that we call information returns directly from the payors. They have an income matching system that flags missing tax returns from those information returns. The IRS can estimate your income based upon your mortgage payments, your lifestyle, the amount in your bank account, and those information returns. They can also see peer-to-peer payments such as PayPal, Venmo, Zelle, and other accounts, similar type accounts. And more, those are increasingly reported to the IRS. There's also a crypto reporting expansion. So a lot of people think that their cryptocurrency is private and untrackable, and that's not always necessarily the case. You're not hiding from them, you're only delaying when they decide to look. What happens when the IRS eventually files a return for you? We call that a substitute for a return, or an SFR. What happens is the IRS creates a return with no deductions, no credits, no nuance. It's just brute force. Whatever number they come up with, that becomes your debt, and that's even if it's completely wrong, and it usually is. Penalties and interest start compounding fast, and once assessed, the IRS can begin collections. I once had a client who hadn't filed in 20 plus years. They went to their local neighborhood accountant. That accountant dutifully prepared and filed the last 20 years of tax returns, and this created a disaster. And that's because that accountant wasn't aware of the 6-year rule. The 6-year rule holds that most people who are chronic non-filers, if they have more than 6 years that they haven't filed, they only have to file the last 6 years. That's the general rule. Let's talk about what happens once IRS enforcement begins. You start to get a series of increasingly serious letters, and if those letters are ignored, then IRS enforcement action begins. What type of IRS enforcement action? Well, wage garnishments, bank levies, tax liens, criminal charges, fraud. The criminal charges and fraud accusations are actually quite rare, but why would you expose yourself to those types of allegations? The truth is, most non-filers will never see jail, but they will see penalties, interest, and a whole lot of stress. What's the first step to fixing this? Well, you have to get current. What does get current mean? Well, it means what I alluded to just previously. If you have missing tax returns, you have to get your last 6 years tax returns prepared and filed. That's the 6-year rule. Increasingly, the IRS is also enforcing that you make estimated tax payments if you're self-employed up to the quarter that you're in the year. For example, if you're in the first quarter of the year, you have to have made at least one estimated tax payment. If you're in the third quarter of the year, the IRS is going to expect you to have made at least 3 estimated tax payments. Generally, the IRS only requires the last 6 years of returns to get back into compliance, as I've said before. Filing 15 or 30 years worth of returns can make things massively worse. Then that's why you should never let your accountant, who doesn't know the 6-year rule, blindly file decades worth of returns. Here's what tax attorneys review first. We look at the strategy, liability impact, negotiation options, and preventing unnecessary penalties. Let's talk about what's changing in 2026 and why non-filers need to act now. The IRS has an expanded budget, and that's finally starting to hit operations, particularly in collections. They have new AI-powered non-filer detection tools. They have faster matching of unfiled tax returns with income data, as I alluded to at the beginning of this video, and there's much more automated enforcement, such as letters. Those letters become liens. Those liens can then become levies. There's also higher crypto reporting and 1099K tightening. What are 1099Ks? 1099Ks are often used for merchant accounts where businesses run credit cards or debit cards, but also increasingly for PayPal, Zelle, and Venmo type payments. So even if you're paying back your friends for dinner using Venmo, if that exceeds $600, that's going to be on the IRS radar very soon. In 2026, the IRS will find non-filers faster, more accurately, and more aggressively, and the days of hiding in the cracks of an inefficient system are ending. Here's why you want to make the first move and not let the IRS make the first move for you. When a taxpayer becomes a voluntary filer, the IRS treats your case differently. You maintain leverage. You have more favorable payment terms. You have more options available, such as offering compromise, currently not collectible, or penalty abatement. You have less emotional and financial damage, but most importantly, you can make a plan to deal with the problem instead of allowing the IRS to dictate its terms to you. If the IRS contacts you first, it's like walking into a fight with both hands tied, and when you make the first move, we walk in with a plan and they have to listen. So if you haven't filed in 10, 20, or even 30 years, here's the bottom line. This is fixable. But the window to fix it easily is closing fast as 2026 enforcement ramps up. Doing nothing is the only wrong choice. But here's the part most long-term non-filers don't think about. Even after you get compliant, the IRS is about to get much more strict with business owners in 2026. There's new rules, new reporting requirements, and automated enforcement, which mean you could fall right back into trouble if you're not prepared. That's why your next step is to watch the following video. It walks you through the exact moves business owners need to make now before the new laws hit. That video is entitled Smart Tax Planning for Small Business Owners: How to Stay Ahead of the IRS in 2026.